Good afternoon, everybody. My name is Cole Strandberg. Thank you for that kind introduction. Very happy to be with you here today. If you paid attention to that title, you must think Aaron is crazy for starting off on such a high note here, but I promise you there's a happy ending at the end and a ton of opportunity to take advantage of here in the collision repair industry, to the point of I'm excited for each and every one of you here in the future you're going to have. Before we get started, I want to get to know you guys a little bit more. Raise your hand for me if you are a business owner. Love that. Perfect. Raise your hand for me if you want to be a business owner one day, or you might. Fantastic. Anybody who just raised their hand right now, this is for you. If your boss is here, keep your hand down. That's okay. I've counted you anyway. The genesis of this conversation actually happened from our friend Mike Anderson. I had the fortune last year at CIC at SEMA to speak on a panel on consolidation with some other investment banking professionals within the collision repair industry. Afterward, we felt it went really well. And so we're sitting up there, it's time for Q&A, and Mike stands up, and we all know the gravity that man has on a room, and gets in the line for Q&A and hits us with something along the lines of, guys, we just spent way too much time talking about how to sell. We didn't spend nearly enough time teaching business owners how they can use some of the tactics from the big guys to grow and improve their business. And so that's what I want to talk about here today. Here's my controversial take. It's the title. The era of the single store generalist body shop is coming to an end. Now, why might that be? I see some nodding along, which I appreciate. It's all the reasons you guys know about and think about and deal with every day. Increasing vehicle complexity, the equipment and the training needed to properly repair today's vehicle is a different ballgame than it was 10 or even 5 years ago. The technician shortage, for all the conversations I have in the industry, somehow, whatever the original topic was, at some point we touch on the technician shortage and what a challenge that is. We have increasing competition, continuous challenges with insurance relationships, and a lot more. There's a lot of headwinds facing us, but the beauty is these challenges create some really compelling and unique opportunities. So I want to start with saying that I think we have three fantastic options for the future of collision repair businesses, and we can combine some of the three as well into a really compelling growth strategy. Option number one is specialize. Option number two is scale. And option number three is sell. And I want to touch on each of these options more in depth here today. Specialize. What do I mean when I say specialize? It could be what comes to mind. It could be high-end luxury and exotic. It could be truck. It could be EV. It could also be a little bit more subtle than that, a little simpler. What are your OE certifications? What's in your market? What are you good at fixing? Double down on what you're good at, and that creates efficiencies among anything from supply chain and ordering parts to your technicians knowing the vehicles they're repairing like the back of their hand that turns them into that NASCAR pit crew right there. Another incredible benefit of specialization is the financial component. In my role at Focus, I have the opportunity of reviewing a ton of body shop organization financials. And a consistent theme is that body shops who specialize are substantially more profitable than body shops who don't, than their counterparts, a similar business. And there's reasons for that. The efficiency, certainly, being a domain expert in your market, being the go-to group. There's also the ability to go in and, hey, if I'm fixing a few types of vehicles, maybe we look at bringing in some other things that we might otherwise outsource, like ADAS calibration. By the way, when I say substantially more profitable, I mean in some cases, in most cases, it's north of 50 to 100% more profitable than their generalist counterparts. So some phenomenal reasons there. At the end of the day, the industry is in sort of a David versus Goliath battle. David obviously can defeat Goliath, but he's probably not going to do it if he fights the battle the exact same way. So let's figure out how to differentiate from everybody else out there in the market and create your own unique value proposition. Another way to differentiate is to scale. I speak with a lot of folks who, when we talk scale, it's why is private equity doing this? Why are these big companies going this hard? Where's the money? And there's a lot of reasons. The industry has a lot to love, and they are crazy about it. But a big one is something called multiple arbitrage, which essentially means when you're buying a company, you want to make sure that 1 + 1 equals more than 2. And I want to give you an example of that. Say we have a theoretical shop that does $3 million in revenue. It has 10% EBITDA, and say it sells for 50% of revenue, or 5 times EBITDA. Now, there's one company in our industry that we have full access to their financials because they're publicly traded, and it's all they do. And that, of course, is the Boyd Group and Gerber Collision and Glass. Some numbers I pulled, their sales in 2023 were $2.9 billion. Their EBITDA, their adjusted EBITDA, was just north of $368 million for about a 12.5% margin. Their value at the time I pulled these numbers a few months ago was $5.6 billion. That represents 193% of their sales and about 15 times EBITDA. So if we go back, say they're the ultimate acquirer of this company right here, assuming an efficient market, when they acquire that company, it immediately triples to quadruples in value. And that is the magic of scale that we can replicate at a smaller, kind of growing regional player level. How do we acquire? That's kind of a foreign thought for a lot of people. I don't have a few $1,000,000 sitting in the bank account. In a longer version of this, I'd dive into each of those and talk about them. I want to kind of briefly gloss over 2 of them, and that's to take on investors or to partner with private equity aimed at some bigger growing groups, and some programs by the SBA, the Small Business Administration, which I believe are an incredible resource that we are underutilizing. For private equity, it's all the talk. There's a lot of private equity interest out here. Full disclosure, they're typically looking for some pretty substantially sized organizations. They're looking at 5+ stores, 2 million+ of EBITDA, but more and more growing founders and operators are shifting the perspective of talking with private equity. It's going from, hey, I'm selling to private equity, it's an exit, to I'm partnering with private equity. I love what I'm doing. Let's double down. Let's pour some rocket fuel on this thing and grow it like crazy. And it comes down for them to a pretty simple equation. Do I want to own 100% of a grape? Or would I be okay owning 30 or 40% of a watermelon? And for a lot of folks out here, they're thinking watermelon sounds pretty good right now. Let's blow this thing up. Let's go crazy. The SBA has 2 programs targeted at small businesses and aspiring entrepreneurs. One is the 7A program. Another is the 504 program. Essentially, it's designed to promote small business ownership and growth, where they will give small businesses and individuals with good credit up to $5 million in debt to go out and acquire a good company. Now, some strings attached, right? Personal guarantees. We have some down payment requirements depending on the buyer. But it's an amazing resource that we're seeing used left and right in all sorts of industries. I think we're underutilizing that here in the collision repair industry. Don't get me wrong, a lot of reasons to not scale. If it's not your skill set, if you're not in the right market, it's not in your goals and dreams for your business, that's fine. But I do want to be very clear, access to capital should not be a reason to not scale. Now, I can't help myself. We talked about selling. I love this topic. I want to give a very brief overview of the market, and then we'll wrap it up. But essentially, the bigger you are, the better your multiples, and the stronger the interest is for your business in the marketplace. We have regional consolidators that are very well capitalized, buying like crazy, growing like crazy. We have the national consolidators, which we, of course, all know are out there in droves. And they have mostly recapitalized here in the last 12 to 18 months. So they're sitting on more cash, mandated to spend that and grow bigger and faster than ever. And then we have private equity. Just in my last 12 months, I've spoken with 100 private equity groups looking to get into the collision repair space. So what does that mean for shops? At the lower level, single store, valuations are remaining steady. They're strong, but they're not going up or down. At the higher level, the growing MSOs, we're seeing those valuations tick up. It's a simple supply and demand calculation. There's more buyers out there than there are businesses to buy, so it is a fantastic time to be a seller of a collision repair business. It is my opinion that this isn't dire. The single store generalist body shop is not dying tomorrow. But I think everyone here is here for a reason. They're here to improve their business, to grow their business. I think to have some foresight as to what is happening is a great thing. And I think the only thing you should not be doing is nothing. I think between specializing, scaling, and selling, or a combination of all the above, there is a extremely unique opportunity here to take advantage, build something special. And for that reason, I believe there has never been a better time to be in the collision repair industry than right now. Guys, I know this was brief. We glossed over a lot. I've put my contact information up there. If anybody wants to chat about anything industry related at all, please do. Additionally, if you like this type of content, please check out the Collision Vision podcast. Aaron, I appreciate the shout out. Some incredible guests, including a lot of people here today. Thank you so much. Have a great SCRS, have a great SEMA, and a fantastic day.